We have a massive week ahead. I'm talking about a dense cluster of economic data that was delayed and is finally hitting the tape this week. If you thought last week was volatile, buckle up because we are about to see if this rally actually has legs. In today's video, we're breaking down the narratives on Wall Street, the options flow, and the chart technicals. Also, I'm going to reveal the 3 new positions I put on today. But first, a quick reminder, this is not financial advice, so please do your own research. I'm just reading the radar, but you are the pilot. First, let's take a look at the big picture. The vibe right now. It's cautiously optimistic, but still quite anxious. We saw a nice little rebound in tech, specifically chips and AI, but there is a heavy rotation going on under the surface. While everyone is staring at the mega caps, the real story quietly shifted to small caps. The Russell 2000 has been outperforming the broad market recently, and this tells us that investors are looking for value in beaten down names, rather than just piling into the same top 7 stocks. And I think that the rotation is eventually gonna come back to semiconductors. Now let's connect the dots here. Why is the market in an anxious state and kinda hesitant to go full bull mode? It's because we are walking into a data minefield this week. Starting tomorrow and through Friday, we have a backlog of delayed economic reports dropping all at once. We've got retail sales hitting the tape on Tuesday, followed immediately by the delayed jobs report on Wednesday. Then we get the big one, CPI inflation data on Friday. This is a make or break moment for the soft landing narrative. And the market is desperate for confirmation that the consumer is still spending. If the CPI number comes in hot while the jobs look weak, that is an actual stagflation nightmare scenario that some bears are betting on. Alright, now let's talk about some actionable strategy. Let's move over to the options flow and to the charts so we can see where big money is positioning. Alright, first let's take a look at the flow overview. This is a breakdown of where most of the money went during the day in the options. On the bullish side, you're going to see that we had Google 31.5 million in premium here, and also another 20 million down here. And then Amazon pretty close with 20 million, and then below that we have some Intel and some Apple. On the bearish side with the puts, Tesla is getting a bunch of puts coming in, and I mean a lot, because Tesla right now is at a critical point on the chart and it could flip into a short if it doesn't clear this next area. And now switching over to the gamma exposure, we're going to take a look at what's happening on the SPY. Today, our spot price closed around 694, and you'll see we are right next to the call wall here. And if this can break through tomorrow or sometime this week, then we should get a move up to 700 and likely try and take out the highs. But there are some caveats here, which I'm going to discuss once we get to the charts. Now, looking at the options order flow, you'll see that some of the biggest transactions today came in on Tesla as puts. This was a $24 million sweep. It is for a strike of 600, which is a little bit odd. However, I don't think this is somebody who's selling these puts. These are likely hedges or institutions actually going short on Tesla. You don't see a retail investor come in with $24 million of leverage on the options. And right below that, we're going to see the SMH, that is the VanEck Semiconductor ETF, $8 million. And this was a sweep, so it was an aggressive buy on the call side. And then you come down here, a little bit more puts on Tesla, a whole bunch of puts on Tesla, and then you're going to see some calls on Google. The rest down here is very mixed, but the ones I just show you, those were the biggest transactions of the day. All right, on to the charts. First, let's start off with the SPY. For the past week or so, I've been saying that we are in this channel. And we broke the channel one day, that was last Thursday, at which point I bought up some calls on the SPX, which yielded about 100%. It worked out nice. If you want a breakdown of how I decided to get in here, you can watch yesterday's video. I break down how to swing trade extremely volatile conditions. Now on to what's happening today. We got a second nice big green candle, a very powerful move to the upside. However, we've been holding this channel for quite a bit. And as we get closer and closer to the top, I may actually start cutting some positions. And when I'm looking for positions these days in this type of market, I'm looking for the most beat down stocks that are ready for a bounce. I'm not trying to chase continuation moves when we are in a very choppy, volatile market. So when we get up here, people are going to think, okay, the bull run's back. We may even break through here briefly, which we did earlier in the year. We had a channel and we broke out of it briefly. People said it's going to go parabolic. Actually, that was 2025. And I said, yeah, it's possible, but it's unlikely. We should likely come back into it. And we did, and we flushed pretty hard. So I'm watching here since we've had 1, 2, 3, 4, 5 points here, always reject off the top. I don't think this time is going to be any different. So as we get up closer, I'm going to take my longs off and maybe open up a short. Another way to play it is to keep your long positions on and buy a hedge. So if it pulls down, then you can sell the put and cash in on some money while holding your positions. Now on the triple Qs, the Nasdaq, it's a little bit different than the SPY. We have more room to the upside. On the SPY, it was about 1 or 2%, but here to the top, we have about roughly 4% of upside if we decide to come up here and retest this. Now you gotta pay attention here that we do have a double top, and this in itself is very bearish. However, when you zoom out like this, you'll see that this trend line here has been holding, with the exception of this madness we went through last week. And as long as this channel holds, my expectations is we're just gonna keep chopping here until we get that breakout. It's going to take a while, and I don't mind if I'm wrong. If I'm wrong and I get to catch some really crazy moves to the upside, that's great. In the meantime, what it looks like right now is it's a short covering rally and some longs are coming in. However, the rug pull could happen, so you have to watch out. And this market is just looking for an excuse to sell off. The fear is still there. You gotta keep that in mind. All right, now looking at the IWM, this is the Russell 2000 small caps, and you'll see that we had this resistance zone here and we cleared it. We came up, we found our next target, 271. We had a pullback to the 50 EMA, and then we had a bounce. This signals to me continuation in the small caps. This should see a move up to about 281 based on the fib levels. And let's recalculate that because I haven't put this down on the chart for a bit. And yeah, it lines up. The 618, this is your primary target, 271.41, and then the next target, 25.70. I think this middle target here is likely achievable in the short term. Now the question is, will money continue to rotate into small caps, or will it start splitting off and also going into semis? I think it's going to be a nice broad market rally if things begin to pick up. And looking at the VIX, we have come back down to our baseline, and this is quite interesting. We have a trend in the VIX that's been going up. It started late December and it's been steadily grinding up, and we're getting these little peaks. Now onto Amazon. This position I got in today. I was in this earlier, I forget, maybe like a week or two ago. It was somewhere around up here, and I was playing these bounces off the trend line. They served me very well. I got 2 rounds in on Amazon, but on the second one it began to pull back, so I decided to get out because we didn't get a breakout of this high. And what eventually happened is the earnings came out, and the panic set in and we just gapped down. Now we have this gap right here, pretty decent gap, and we have another gap here up to this long-term trend line. When I was watching this today on the open, I saw it go up, go down, it kept whipping around until it came down pretty low here. And I was like, if this holds, maybe it's a buy the dip. It did start seeing buyers come in. Now I'm looking for this gap fill here. My primary target would be around 222 and my secondary target would be up here about 231. All right, next up on the list is Coinbase. And like I was saying earlier, I'm looking for beat down stocks. I don't want to buy stocks that are high and can melt down once we get any type of bad news that hits the market or a tweet or whatever. So here we are dumpster diving and Coinbase seems like a good candidate. We have this support zone down here that's been holding pretty well. And we've already seen a reaction down here. Now the question is, can this get a bit to the upside? Now I don't like to play earnings, but when you have a stock that's been beat down this hard and it's sitting all the way down at support, I don't mind taking a swing at it with a small position size. Whatever happens after earnings, you can decide to scale out, or if you think it has more momentum to the upside, you could even add into it. But right now it's looking like rock bottom for Coinbase. I haven't done a deep dive into the earnings expectations, but all I can tell you is that this support area here looks very solid. It's going to take a lot to drive it down in case we get like really bad news. Our next support is down here at around 118. Next up, I have a position in AMD. What we got here is 1, 2, 3, 4 points of contact respecting this support level. And this was our low when we had the panic, when AMD started melting down on earnings and then Amazon added fuel to the fire. I think this is the bottom for AMD. On the NVDA chart, it's a little bit different, but we're going to get to that in a second. I'm looking for at least a gap fill, and that's about 8 to 9%, which is pretty decent for this trade. However, longer term, I'm thinking we come up here because we are in a range. So that's about 24%. So we're going to see what happens here. We start to fill the gap, maybe get a pullback, and then to the upside. However, we could still chop here for a bit, but I think I have a good entry on these calls. Looking at NVIDIA, we are in this range, but the difference is we are at the top of the range on NVIDIA rather than AMD. So I'm staying away from this. What could happen is we do have earnings coming up and it could blast it up and it could pull the whole market with it, to be honest. But for the time being, I'm not betting on a breakout. I would stay away for now. And then we got Palantir. So we had this previous support here from around June, July 2025, and that's where we bounced. Now, since then, we have come up to the next resistance level. This was our support above, and then now it's acting as resistance. If we can clear this level, my next target would be around here, 156, and then we can talk about these higher areas. And last but not least, I get a lot of requests in the comments for Robinhood. Looking at what happened, we've had a crazy meltdown, and now we're getting the snapback. So similar to what happened with Palantir is we have our resistance levels up here. So we have one at $97 and the next one at $104. We do have some room for a move up to here. That's about 12%. And I think this looks pretty nice. I didn't grab any calls on this, but I'm going to reassess tomorrow. I'm trying to build up my positions gradually because I don't trust this market we're in. Now, if we get good earnings, and this is on the 10th after the close, so that's tomorrow, we'll see if this area can be cleared. If we clear this area, it becomes support, and then you could build some structure to the upside. But for the time being, I think this is a nice area to scoop some up, but I'm not trying to pick up too many positions where they're all like earnings plays. The morale is really low on Robinhood, but we are in an accumulation zone, in my opinion. And if you zoom out even more, you'll see that we had this support area here. This was a resistance, and then now we flipped it support. So I would say our downside could be 66 if things get rough, but to the upside, we're looking at 104 or higher. I hope you guys like this video. Do me a favor, if you found this content helpful, help this channel grow. Hit that like button and the subscribe button so you can get notifications on the next video. Let me know in the comments what you guys think of the market right now. Is this just a fake out, or are we gonna go full bull mode and break the highs? Take care guys, and I'll update you again sometime midweek. Peace.